Indian IT companies are seeing very strong deal wins, and CLSA expects the NASSCOM growth guidance at 8 to 10% for the coming year. R. Srikrishna, who is the CEO of Hexaware Technologies, joins us now to talk about the outlook for the sector itself. Srikrishna, good morning, and thank you so much for joining us. I wanted your view on, the NASSCOM growth guidance of 8 to 10% for the coming year. Is it likely, and what do you see for yourself as well as for the industry?
So we think there is some mixed signals in the environment. U.S. macros are strong. I think any fears of slowdown in that economy is a little bit overstated. In fact, personally, I think for IT, U.S. is actually going to be supply constraint in the near term, more so than demand. U.S. will be strong. Europe, on the other hand, there are multiple issues. Germany is, barely avoided a recession. Brexit is just ahead of us. So Europe market is more uncertain. But Europe were better than it was in the past year.
Okay. All the companies we spoke with, or most of the companies we spoke with at the end of the December quarter, seem to indicate very good deal wins. And hence my question, is it just that Indian companies are going to get the same share of a large pie, or are they able to even increase market share?
Well, clearly the global market is not growing as fast. So there is some market share shift, but there's also some kind of consolidation through M&A. So I think both are at work.
Okay. So, what's the sense you're getting about the deal wins itself? Considering how strong they are, has there been just an increase in the number of deal wins, as in the volume has gone up, or are you even seeing the value of deal wins go up, not just for yourself, but for the industry as a whole?
Yeah. I think it's the value per deal has gone up a little bit. However, I would caution against drawing a straight line between just the deal wins reported and growth of future. I think if you look at the past of our industry, you'll be hard-pressed to draw a strong correlation between reported deal wins and subsequent growth. Because growth actually has a number of other factors. It doesn't account for, the deal win doesn't account for how much of your current client base or current revenue base is contracting. But it is one metric, but not necessarily one with a strong correlation for future growth.
Srikrishna, what's the kitty you have set aside for inorganic growth? And should we hear from you sometime soon? 2019, first half of 2019?
Well, I don't know if you'll hear from us sometime soon, but we certainly have said that we want to spend $250 to $300 million on acquisitions in the next 2 to 3 years. We've shored up capital now for some time. We reduced dividend about 2 years ago, so we have cash in the books. We are debt-free, so we can assume some debt. So we could spend some here and now, and we have an active program, but certainly the intention is to spend 250 to 300 in the next 2 to 3 years.
Okay, well, is NIIT on your radar? NIIT Technologies?
No.
Not on your radar.
No.
Okay. Is there any truth to the rumor that Bearings would be buying NIIT Tech, eventually merging it with Hexaware? That's the rumor doing the rounds. You want to deny that?
Sure. Okay. Well, whether Bearing is in the race to buy NIIT or not is something I wouldn't know. But what I would know is if part of the plan was to merge it with Hexaware, and that I can tell you is not there.
Okay. Well, let me just come back to Hexaware and its businesses. Which vertical is giving you most orders?
Well, actually, we formed a new vertical last year called professional services. In part because that's a fresh market for us to address. That's seen the maximum deal flow. But in terms of growth, actually, manufacturing and consumer and healthcare and insurance both have grown in the mid-20s for us, very robustly, and we expect them to do very well in 19 as well.
Okay. All right, that's a positive. Thank you very much, Srikrishna, for joining us and giving us an update of how business is. So any slowdown of US business is not correct. The word from the management is that orders from that space are growing fairly robust. So that's an optimistic Hexaware management.